Now, today we are going to talk about the trend lines, like the first thing that you need to understand when it comes now to the technical analysis. This is a chart, and this is very important because when you are actually opening your chart, let's say on the trending view on the different platform, the trending view is really going to help you now on how to draw the trend. And number one, the last class we discussed about the trend of the market, like the direction the market is taking. Now we are going to move on this, and at least this is one of what we call now the confluence. So today we talk about something very important, which is trend lines. So we talk about the trend line. So the trend lines is the topic of today, and that is what we are going to be talking about. And we are going to have this reference of Euro USD as the pair. So in case maybe you have never had, or maybe this is your first time in technical analysis, then this is a really good opportunity now for you to learn on how to analyze market using the trend lines. You have to know that trend lines really works. These trend lines really work so perfect. But there's a way you can draw some of these trend lines and then you end up losing money instead of getting money from the trending. Some of this time you'll be seeing some people actually drawing the trend line and working so well. You're going to see a lot of things in the market, right? 1 minute. Amazing. Now we talk about the trend lines, and trend lines I'm going to show you how to draw, because sometimes some people will think that just drawing trend line is where you just draw a line like this, and then of course the market is going to buy at your zone, and the market is you're going to make money with that. Of course not. There are some rules that you really need to understand about how to draw a trend line properly, and the reason I started this because I told you I'm going to be teaching you some of these things that really look nice, but they are somehow you may think complicated but very easy. So I want you to train just like a pro. It's not just like a beginner. I want you to train like a pro, and that's why I'll be giving you all things in the details. Now, very quick and very easy. A trend lines is is a trend line. A trend line is a line that actually connect at least, let's say, 3 point. So when you are drawing line to connect into the market, these are the rules that you have to apply. Number one, you make sure that you write this, that the trend line that you're going to draw is absolutely going to connect at least 3 point, right? So these are the rules that we are learning here. And once you know how to draw proper trend lines, then of course you're going to start to note on how to analyze in the market. It's really going to be very easy. So make sure that you take these notes. I'm going to change these colors here so that at least it can be very visible. So that is rule number one. Make sure at least now your trend lines connect how many point? It's connect at least 3 point. What do we mean by point? Sometimes you see, for example, this market that is moving here, and let me show you 2 point, how 2 point look like, and how weak those 2 point can really become. Those 2 point, you cannot have a point that like this. You cannot have the point like this point here, and you think it is really going to work like this one. You see, you think like this point and this point are really going to connect, and even when you try to bring it on this side, you see it's not really working. So 2 point is not a trend line. A trend line actually should point at least 3 point, should actually touch at least 3 point when you are just drawing it, right? So make sure that anytime you are drawing a trend line, it actually should connect 3 point. Let's try and see whether we can actually, do you see any trend line like just connecting at least the 3 point into this market? Yes, we can see it around around here, and actually the market should have reacted when those trend lines were there. If you try to draw this trend line, this is really not going to work by even the look of high, because it was really broken here. So there's no trend line around here, because this is not really working, because this market moved all the way above here, and remember, we are on the daily time frame, so that is not really going to work. Sometimes you're going to see how the market is moving, and south niko sawa kweli, niko sawa achu. uh, okay. Okay, thank you. Now, a trend line should connect at least 3 point, 3 point. That is what we're talking about here. Now, you just unaangalia tu na macho, like, where can I get at least this market connecting at least 3 point? At least 3 point is, let's try and see whether you can see this. But when you look at this, it's not really that 100%, and you cannot really force it, right? Just know, I actually don't have even a perfect example here. We're just trying to find it, all of us, like a point that can just connect another one. But when you look at this, market when it was here, so I can have the replay and just cut this market here. For those you don't know how to back test, of course, that is what you can do, but you can just do it on the highest time frame, that is the daily time frame. I'll show you how to replay the charts in order maybe to analyze and see these things about this one. Now, when you look at this, how the market is really touching this one, this is really perfect, because once you touch this trend line, look at that. This already is perfect. Do you see that? So this is a strong trend line, because it connect 3 point, and once the market touches 3 point like this, of course, you know it is strong, and then you can just extend. You just extend it. You just come and extend it all the way, just like that, such that around this area here, you can either buy from the top, but we are going to identify when is the perfect place or the better place to buy from this market, because even if you had bought from this market, then you need to know where you're going to exit and the trend of the market. Number one, this market is moving down. This market is moving down, and if this market is moving down, of course, you want to take advantage to sell from this market, but you have to be very careful, because this market can reverse all the way to the top, right? But if you buy from this market, of course, your journey to the buy is actually going to stop around this area here. We are going to identify where you are going to place your stop loss or the buy stop around this area. So this target here, if you play, you're going to see at least this market is going to move to that place. Let me put this spin of 1 year. Let's just play and see. Look at that. So this trend line is strong. What I mean is that once we see this market touching this zone here, then of course we are going to buy. But look at this. This market cannot go further than this area here, right? So let's see what we are going to be getting from this market. It absolutely moves up, tries to touch the upper side, just like that. So we are still moving. It has touched that area there, right? Now the market is moving down. Let's see how this market is going to react. You can see it is going down, and boom, let's see whether it's going to touch our trend line. Then we are going to execute and buy order from that market. Let's see. Still moving. Trying again to move up, taking time. The market is moving down. So you cannot really buy and keep buy orders on this market that is moving down, because the trend line has already confirmed to you that this market is moving like that. So look at that. Even if you just started buying, you could have actually started to start buying at this area here, which is actually around, you just give it some few pips either down around this region here, and that could have actually been so perfect. So let's see what the market is really going to be doing again. So this trend line becomes very critical, so we can still extend this. So this trend line works so perfect. worked so perfect right here. Let's see whether this market is going, but you can see now the market is changing, or now it is really moving, and now we have what you call now the change of character. But you can see you could have actually spotted many opportunities here like this to buy. Number one, at least here, this one, and also this one. But we have also, remember, the best place now for the market that is moving like that, then you ought to find sell, because that is the trend of the market. If I take this trend line here, then you notice one thing is the market, it is still moving down. The market is still moving like this, and this is really good. Like the market is still moving like that. And how many touches do we have? We have 1, 2, 3. So this is really perfect. So you could have actually written for that. You sell here, also you sell here, and you can see how the market sell here. You can see all this one, but make sure that at least you don't move more than 5 times. All right, 1, 2, 3, 4, 5. At least 5 times. You make sure at least after touching 3 times, then of course don't sell more than 3 times. All right, after 3 times, make sure that you don't sell. After 3 touches, don't sell more than 2 times from that market, because it's really going to change the direction. So you can see there's touches here, but this market, because it is moving down, it is more favorable to do what? To buy, to sell, than buy from this market. Is just simple as that. So that is number one. That is number one rule that you must create from this kind of the market that is moving like that. So this is rule number one. Let's move to the rule number 2 that you need to know about the trend lines. All right. The rule number 2 is you should operate under high time frame. You should operate under high time frame. High time frame, that is where you should operate and higher time frame. Higher time frame, I means that actually select, it is becomes like higher time frame, then give you something amazing here, because highest time frame are more accurate. Highest time frames are more accurate. So highest time frame are more accurate compared to the lowest time frame. You cannot use and go to 1 minute time frame or 5 minute time frame and look for the trend lines. Even if you are scalping, I think, unless maybe you are just crazy, because the trend lines, this market is normally very noisy. Like you're going to experience a lot of noise into this market, and sometimes you're just going to use it. So the strongest trend line that you can get from the market is absolutely, and I mean absolutely, the highest time frame is going to be more accurate compared to the lowest time frame. You can see all this, you can actually spot multiple time frames. You can spot many of them. Let's, for example, look at this and see how it can actually trick you. Look, for example, at this market. If you drawn all this market moving up like that, right? You can see noise here, or maybe you can even start here, and you see something like this, and you see 1, 2, 3, and you think now you are going to buy when this market touches this area. And once the market touches this zone here, what happens to this market? The market, absolutely, you can see how it happened. The market even did not bother around that area. The market continued to move all the way down. The other area is this area. That's why lowest time frame are messy. Like lowest time frame are messy, like very noisy. So you're going to experience a lot of mess when you are operating under the lowest time frame. So that takes us to rule number 2. Make sure that at least you use highest time frame, and you do that. Now, assume now you get, this is now what happens. So we sent highest time frame. This is a point number 2. But how do you now enter? Because also the 1 hour time frame matters, because also the lowest time frame matters. Lowest time frame matters, right? Lowest time frame matters. Lowest time frame matters. Yes, you can use highest time frame. Let's say you can actually give examples here. operate from 4-hour time frame, daily time frame, 1 day. These are strongest time frames that you can get from this. These are the strongest that you can get. For example, when you want daily time frame, you need something around this area here, right? Or maybe we can find one here. This is not really good. This is not really good. I want to just use an example. I want to just use example here. I want to just use example. Although this is not really correct. I want to just use example. Now, assume now this worked here, like this one. Assume maybe the market was like this. And that's how we moved. Now, if I want to enter at this place here, which is this region, because this already I have selected daily time frame. So what I do, I come and I light this area like this, all right? So I know this area matters. I assume this is the 4th point, or because just observe the Euro USD. Of course, the market actually might be touching 1.21 and just go back again. That is what this is a live market. Of course, it might be happening that because of this line that we spotted here, because these are 3 spotties already. So observe when this market touches 1.21, we might be getting a reversal towards that one, right? I don't know when this is going to happen, because you see we are very far from the point. Maybe next month, or maybe in the next 3 weeks or 2 weeks, all right? Now, assume now you want to sell around this area. What do you consider? What do you do is actually you lower the time frame. Let's even to 1 hour time frame, so that you can analyze on your area here. So you're going to look more on what's happening around this corner here, so you can just know the perfect time to buy and sell from that market, right? So I make sure. So already that is my area of interest. This area here, the market has already touched this one. I can even move to 30-minute time frame. So some of these things, if you're using the phone, it's going to really to be very complicated. So where is our area? Our zone on 30-minute time frame is located where? Yes. Let's even move to the lowest time frame that we're talking about here. So this is what you need to write down there at the time frame. Draw trend lines on the highest time frame, 4-hour time frame, and daily time frame. Then confirm your entries. Enter using the lowest time frame. Enter using the lower time frame. Why? I don't know why this is giving me a lot of headache when it comes to this. I don't know what is happening with my network. Yeah, but that is it. So what are you doing? Now that is what you just do here. So you move, you get lower time frame. You're going to see a lot of candles around this area here. Now it will help you now to have a sniper entry, like to know exactly how the market is going to do. Because if you move to 1 hour time frame, you see certain type of candles forming around this area here, and that is when you know it is now the perfect time to sell from that market. And now I'm going to sell because of alignment on there. The market has touched already. The market, you know, of course, we are already touching our point. Already we are there. It's the same thing that I'm talking about here. When these prices approaches 1.21, observe so well when the prices comes to this area here. Make sure after that, then you go to the lowest time frame and find the best entry using the same formula. Now, sometimes you see this market doing like this. When it approaches a certain area of key of interest, like this one, then some people end up selling immediately, and this is where the trick come in. Because if you've been trending trend line and losing it, then this is your point. Some people come and sell like this because they think that the market is really going to sell from this area. Yes, you are very correct, but this is very obvious. This is very obvious because you can see the market touched this and then descended to hit your stop loss. Of course, that is obvious. So what is the trick here? The trick is very simple. You need to realize that when the trend lines, actually the market touches your trend lines and becomes so perfect, because you can see this is actually good, because you can see the line is absolutely at where the market closed and opened around this area here. But all this was actually what we call now the liquidity sweep. So you make sure at least you avoid liquidity sweep. All right, so that is what happens. So when you place your entry across the trend lines, of course the market has to sweep. What do we mean by liquidity sweep? Liquidity sweep is where so many people have placed their stop losses here. Like, you know, you are entered here and you are telling the market once you touch area, once you move above this trend line, then close the trend in a negative, like I'm losing it. And then, of course, the market does the same. It comes and wipes all people's stop losses. Then, you know, after liquidity, that means you are funding the market movement. Then the market resumes to move your place. And that's why so many people ask themselves, why do I all the time lose? And then after I enter the market, I hit the stop loss, and then market start moving towards my direction. Then this is the same thing that normally happens here. It's because you placed a stop loss at the wrong place, and this is very serious. All right. Now, this is what now to do. You make sure that at least you have your entry point here. All right. Most of the time, the market yes can touch good point like this, but most of the time, because of the liquidity, I like this perfect entry that I normally have. I like now to have what we call now the scaling in. This is a trick now. You make sure that you scale. I've been using this term all throughout, scale in. Scale in means that anytime maybe you are having your stop losses around this area, or anytime you have your entries, let's say you are using 0.5 lot, let's say you are using 0. Total on that entry, 0.1 lot size. Then all you just have to do is to divide your entries. At one area, you enter 0.05. Then as the market keeps moving up, you enter 0. Let's say 0. You have 0.3, you know, you get it. So this is 5. Then you have 0.303. Then of course you can have 0.02. This translates to 0.1, just the same. It's only that you have divided 0.1 to different entries. And that's why you can have now your entries as this place. When this market starts reversing, now your entry actually comes at around this area here for a sell. So you have even more advantage. Instead of placing your sell here, and then you realize that the market continues to move all the way down after hitting your stop loss, and then you make sure that's how now you self-divide as the market keeping moving down. As we move, remember this is just the introduction, we move even to the volume sign where you can actually spot and know this is the exact place that I have to place the buy and sell positions depending now on my entry model using the trend line. So this is the beginning of V8. All right, now that is step number 2. That is the entry model. Now how do you, that is how you enter now, right? That is how you enter. You make sure now, that is, just write that down, write that down. Where is our note? Where is our notes? Where is our notes? Our notes are here. All right, now point number 3. That is what we have discussed here. All right, now on entry mode, on entry, place, enter using scaling in model. Enter on entry, enter using scaling in model, right? So this is the number. This is now the point 3 of things that you really need to note about the trend lines, and this is really amazing. So if you really know about the liquidity, then you are really doing on this. And we actually combined 2 points here where we say in the higher time frame and on daily time frame, but also don't forget this there is a point. Actually, this should be point number 4. This should be point number 4. This is point number 4. These are 5 things that you really need to know. Very important. Very important. So point number 3 is enter using lowest time frame. When market touches the trend line. But don't forget about the liquidity sweep, all right? So that is point number 3. Now, what is the point number 5, which is very important as well in this scenario? Now, those are things that you really need to look at every time, right? Now, this is what you really need to know. To spot, avoid, this is number 5. Before even we talk about precautions, let's even talk about this. You need to spot, you need to be able to spot fake or true breakout. Sometimes you may see the market actually breaking this down, right? You may see the market breaking. I'm still using this example here. What normally happens for a fake breakout that was to take the liquidity, like to swipe up people's stop losses, it's normally look like that. Like candle moves up and then moves down like this one. This is the same move that happened yesterday with the gold. For those who are attending, they sweeping the liquidity, looking like that, sweeping all your stop losses. That is how it just look like. Now you should be able to look for something, because sometimes you may see the market closing over this point and you think, you know what, the market is coming down, it's really going to reverse. Sometimes the market is not really going to reverse, because this is what you do. This is when you realize that you are wrong. When the market comes this way, candle closes above on the highest time frame, then when the market approaches towards this entry, it stops there and start building again a momentum towards the upper side. That is when now you realize that now the market is really has already broken the trend line and is still on the momentum to move up. All right, so you should really be scared of that, because that is not really going to work. It can really happen also towards the downside. So it's not all the time that you are really going to be focusing on the move on downside, because you know you're going to see the market moving down and down. Let me, for example, give you this one. You see, for example, you know, you're focusing, you have seen probably this is support here, this support here, and this support here. And of course, this is what happens. The candle comes, closes, swipes all this, and then the next candle that opens still opens this way and start moving all the way down. All right, then that is the time now you realize, of course, now that I'm just losing it. And of course, when the market breaks down, it just gives you a clue. Very easy. When the market moves like that, it moves down, and then the next candle opens just like that. Actually, sometimes it can start moving up, but look on the lowest time frame. That's the lowest time frame. Will help you now to confirm and tell you that, yeah, this market is absolutely going to move down or this way. So the candlesticks will really matter here. So you need to be able to spot between a true and fake breakout that is going to be happening to the market. So that is the most important thing that you really need to know in this market. And that is it about the trend lines here. But you really need to know about this one. These are things to avoid. Avoid these things. Number 5. Let me put even all the points together instead of cautions. So number 6. So these are things that you really need to follow, because they are really going to help you. Trend lines on trending market. So it's either the market is moving down all up. Please don't trend market that is ranging. The ranging market is the market that you see, the market that is like this. Let me show you. The market that is moving like this. Yes, you have spotted this support and resistance zone, and you see this kind of things here, right? This is really going to frustrate you so much. That's why in one of these classes we are going to talk about the support and resistance and what you have really to do about these ones. All right, so make sure that you avoid such market, because you can lose a lot of things. But at least if you use these 6 rules, at least this one, you are really going to start, then at least you'll be able, you are still building, we are still building on where we are still moving, right? So at least you are in a good position now to move and now start analyzing the market. Now start looking for the trend lines here and there and see how the market is doing. This is a 1 hour time frame, and there's different between this. One thing I really want you to note here, before now we finish the 7 point, which is the last one now before we continue to move, which is the last one here, which is this. Now number 7, there are a major trend line and minor. You should be able to spot between major trend lines and the minor trend lines. Where is the major trend lines here? So the major trend lines that we have is, for example, the one that we have drawn touching these 3 points that we have here. That is the major trend lines, all right? This is simple. Now, when you come inside this bigger one, you of course spot maybe small trend lines forming inside that major trend lines, and you pause, for example, the ones that you see here. These are minor. Of course, when you touch a point like this, you realize that is how the market is moving. I'm just giving an example here. Of course, look at this. This is how now the market is really trying to form, and you can see anytime the market has been touching that region, it has just been reacting. So those are kind of things that you get, but I'm just bringing an example. Of course, inside the bigger trend line, you're going to spot the small trend line that are really inside that trend line. So before even waiting for this, you can still see there are also some of these things that you're going to see on the market forming. So make sure that you screenshot this and you have it on your note, these rules that we have here, and then they are really going to help you so much. Those 5 rules, those 7 rules are really going to help you when it comes now to the analysis that we have. Unless maybe there's a question, I'm done with this. So those are the 7 points that you really need to know. We'll keep advancing them, because that is now the start of the introduction to the analysis, and you need to know about the trend line. So unless maybe if there is a question, or maybe wakati utakuwa unafanya practice and then you encounter one of it, then you just let me know. So in case maybe there's a question, let me just know also in the comment section, and also you can raise up your hand.